Hello, and welcome to PantryTalk Weekly Recap, the show where we break down the week's biggest business stories. I'm Alec.
And I'm Zia. We're here to help you make sense of the news using clear, simple business English. It's like having a coffee break to catch up on the markets.
That's the idea. This week, we saw quite a bit of action across the board. We'll be talking about the roller coaster ride in global tech stocks.
Then we'll shift our focus to Asia to discuss India's new national budget and what it signals for the economy.
And finally, we'll look at the world of commodities, specifically the sudden and dramatic drop in silver prices. Let's get right into our first story. So, the big market story this week was a significant sell-off in global tech stocks. We saw some major companies lose value quite quickly, which caused a lot of nervousness among investors.
Okay, you hear that term all the time in financial news. For our listeners, what exactly is a sell-off?
That's a great place to start. A sell-off is essentially when a large number of investors decide to sell their stocks all at once. This flood of selling overwhelms the number of buyers, and according to the laws of supply and demand, the prices drop sharply.
So it's driven by negative market sentiment or a shared feeling of pessimism.
Exactly. And in this case, the triggers were fears about the disruptive power of AI on existing business models, plus some broader economic concerns about future growth.
That leads to my next question. Why are tech stocks, in particular, so sensitive to this kind of news? They seem to have the most dramatic highs and lows.
They are. The reason is that tech companies are often valued based on expectations of very high future growth. Investors are betting on what the company will earn 5 or 10 years from now, not just what it's earning today.
It's all about future potential.
Precisely. So when any uncertainty appears, like a new technology that could disrupt the market or signs of an economic slowdown, that future growth story becomes less certain. Investors get nervous and are quick to sell, which makes the stocks very volatile.
Okay, that makes sense. Now, the news reports also mention that the market started to stabilize later in the week. What does that look like?
Stabilization is the period right after a sharp drop when the rapid selling stops. Prices might not recover right away, but they stop falling. It's a sign that buyers are starting to step back in, thinking that maybe the sell-off was an overreaction and the stocks are now at a good price. The market finds a new steady level, at least for a while.
So it's the calm after the storm.
A very good way to put it. It signals a pause in the panic, and everyone takes a breath to see what happens next. Now, let's move on to our second story, India's new national budget. This is always a huge event for the Indian economy and for international investors watching the country.
Right. So for those who might not be familiar, what exactly is a national budget and why is it so important for businesses?
A national budget is the government's financial plan for the coming year. It outlines two main things: how the government plans to spend money on things like infrastructure, healthcare, and defense, and how it plans to earn money, which is primarily through taxes.
So it's the country's spending and earning blueprint.
Exactly. It's incredibly important for businesses for a couple of reasons. First, government spending can create massive opportunities. If the government announces a big plan to build new roads or railways, companies in the construction and engineering sectors will benefit. Second, the budget sets the tax policy, also known as fiscal policy, which directly affects a company's costs and profits.
That makes sense. This year's budget is being described as focusing on reforms with less room for new spending. What kind of reforms are we talking about?
In this context, reforms refer to changes in policies and regulations that are designed to make the economy more efficient and more attractive for private investment. This could mean simplifying the tax system, making it easier for foreign companies to invest, or cutting red tape that makes it difficult to start a business.
So it's less about the government spending money directly and more about creating a better environment for businesses to spend and invest themselves.
You've hit the nail on the head. By focusing on these fiscal reforms, the government is sending a message that it's committed to long-term stability and growth. This is often viewed very positively by international markets as it can boost investor confidence in the country's economic future. All right, for our final story, let's turn to precious metals. It was a wild week for silver, which saw its price plunge quite dramatically. The spot price dropped nearly 9% in a very short period.
9% is a huge move for a commodity. Why did silver's price fall so dramatically?
It was really a result of the broader market jitters we were just talking about. When investors get nervous, they often sell assets quickly to reduce their risk or cover losses elsewhere. Precious metals like gold and silver are often seen as safe haven assets, but they can also be very volatile.
You mentioned the spot price fell. What does that term mean?
The spot price is the current market price for the immediate purchase and delivery of a commodity. It's the price for something on the spot. This is different from a futures price, which is a price agreed upon today for delivery at some point in the future.
Got it. So, how is silver's movement related to gold and the other market news we discussed? Is it all connected?
It's very connected. While both gold and silver are precious metals, they behave differently. Gold is almost purely a financial asset, a safe haven. Silver, on the other hand, has huge industrial uses. It's used in everything from solar panels to electronics.
Right. So its price is tied to industrial demand as well as investor sentiment.
Exactly. So when there are fears of an economic slowdown, like the ones rattling the tech sector, that suggests that industrial demand for silver might fall. This combination of nervous investors selling and concerns about lower industrial use created the perfect conditions for that sharp price drop.
Right. ESG is a framework investors use to evaluate a company's non-financial performance. So, why is Asia becoming such a hotspot for this right now?
There are a few powerful forces at play. Firstly, many Asian governments are making huge policy commitments to fight climate change. Countries like China, Japan, and South Korea have all pledged to become net zero economies, which requires trillions of dollars in investment. This government backing provides a safety net for private investors.
So, government policy is creating a stable runway for these investments. What about from a purely business perspective? Are Asian companies finding that being green is also good for their bottom line?
Absolutely.